Let's give you the markets update now. The JSE and the Rand expected to remain muted in early trade. Investors' focus remains on inflation, the possible further interest rate hikes and recession fears. Independent analyst is Jimmy Moyaha, who watches that space, and he joins us now for a quick update on how the JSE is performing in early trade. Jimmy, good morning to you. A quick sense of how the JSE is faring this morning after a slightly muted close yesterday.
Morning, Chloe. Morning to the viewers. The JSE opened in the red, largely tracking losses we saw in Asia. We saw the Hang Seng was down about 1.5%, with Shanghai down about almost 0.75%, and the Nikkei down about 0.25%. So we're seeing that the top 40 is down about 0.75% on our side. Resources down 0.2%, industrials down almost 4%, and financials down about 0.5%. The currency side of things, we're seeing that the Rand is sort of flat from yesterday. We know that markets later today, the U.S. markets will come back online after having been closed for about a day and a half for Independence Day celebrations. So it'll be interesting to see what that U.S. picture or what U.S. liquidity makes of the current market picture. But what we're seeing largely is that Asia session was in the red. We're starting the day off in the red. The only real upside looks to be on the commodity side in the form of platinum as well as oil.
Let's talk those commodities. You've already touched on oil. Gold prices steady while oil stumbles amid the economic slowdown fears. Talk us through those developments.
Oil is actually on the up, almost 2% for the day, sitting at about $76 a barrel. This is largely because we're seeing that we know that the supply cuts from Saudi Arabia that were announced previously kick in effectively this month. But what we also know is Saudi Arabia has since come out to say that they are not afraid to look at further supply cuts amid the concerns that demand might not be recovering at the pace that we all had anticipated. And so from their perspective, it's a very clear message from Saudi Arabia and the OPEC Plus bloc that they will be doing whatever it is necessary for them to control and manage the oil price to avoid seeing it go below that $70 a barrel level. We saw it bounce off that level as a support level. We're now sitting at about $76 a barrel. More than likely, at this rate, if supply cuts continue and we see demand start to moderate or pick up, we could see oil potentially go back above $80 a barrel. It might not be anytime soon. It might be after the supply cut effects have been sort of felt into the market. But overall, I think sentiment is still very much focused, from a central bank perspective at least, on what it is that's being done around interest rates, around curbing inflation and managing that. And that's having a knock-on effect on demand at a global level, which in turn is having an effect on how the oil price is performing at this stage.
Let's talk company news. Remgrow has brought more than 13 million Heineken Beverages shares in the past 3 months. That takes now its holding in the group to about 18.8%. Talk us through the significance of this purchase, Jimmy, for Remgrow's overall offering.
Well, anyone that knows Remgrow and that has seen me speak about Remgrow in the past knows that I'm very open to how the share or how the management team has managed that portfolio. It's a very good portfolio of assets, and they're showing their strength from a management perspective in terms of what they're doing strategically at the moment. The Distell merger with Heineken and Namibian breweries, when Heineken took over Distell, resulted in Remgrow having about a 15.5% stake in Heineken. They've upped that stake, as you rightly mentioned, to 18.8% now, acquiring about 13 million shares, pretty much at the same price that the merger deal went through, at about 165 Rand a share. And for Remgrow strategically, this increases their footprint in that beverage space. It allows them to continue to have the presence that they've had, but now with the added support of a brand the size of Heineken. So it is a very strategic move on their part. From the time that they decided to sell the Distell business to Heineken in the first place to the recent developments. We also know that alongside that Distell business, there was almost a similar kind of unbundling approach that came from the Cape Bin whiskey brand that Distell holds a 30% or 30+% share in as well. So that was as a result of that transaction that took place. And you're seeing that Remgrow at the moment is trying to increase the value it's providing to shareholders and narrowing the discount from all of its portfolio companies or all of its assets. We saw this when they took Mediclinic private. We saw this when they delisted Distel, and we're going to continue to see Remgrow strategically manage this to narrow the discount that they have between their underlying investment assets or portfolio assets and the share price that Remgrow is trading at.
Let's conclude the conversation with the 183.3 million High Court damages claim that's been instituted against the JSE-listed restaurant franchisor, that's Spur Corporation, by a South African subsidiary. And that has now been set down for trial in October. What's going on here?
So GPS, the subsidiary, had entered into an agreement with Spur to establish a rib processing division or manufacturing division in Cape Town. It looks as though the arrangement was a joint venture that would then supply all of the Spurs within South Africa. And what has since happened is the operation had to close in the pandemic in 2020. They had to sell off some assets, retrench a lot of staff as a result of that, and they're now saying that from Spur's point of view, Spur didn't necessarily honor certain terms of the agreement, or they didn't live up to their end of the deal. It's interesting to note that in the agreement between the two parties, there was a verbal agreement, and so it's going to be very interesting when we sit down for trial in October as to what will be proven, what will be presented as evidence. Will it be a he said, she said situation? At this stage, Spur has not raised a provision for this in their latest financials. We're looking at anywhere in terms of what could potentially be damages that result from the suit. Spur's confident that they'll be able to defend this successfully. They are not commenting at this stage on some of the points that were made by their partner or former partner in this case, and they're saying that they're waiting for some of these things to be brought up in trial, and when we sit down in trial, when we get to the trial in October, they'll respond to some of the questions that have been, or the allegations that have been levied against them.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update, and to apologize for that patchy line towards the end there.